Welcome to the AccendoTraders Group. This is our weekend wrap report for April 20th, 2008. AccendoTraders.com, effective trade plans delivered daily. And for our new traders, what you want to do is go ahead and pause it here, people new to our podcast. And this is what we do each night as a part of our routine, is just to figure out where the market's going, looking at sectors and checking the news to see which way things are going to affect our trades. So go ahead and pause and see what it is, and I'm going to move on from here. So obviously last week we had great movement in the market, especially going into the weekend, and that was controlled by the earnings. We had some not as bad as expected, which were Wachovia, JP Morgan, Merrill, and Citigroup. Then we had some good reports from Caterpillar, CXX, and Coca-Cola. And then finally came the cream of the crop with IBM and Google. And what's important about that is that at the beginning of the week, we had this inflation data showing that it was still a concern, and obviously housing at a 70-year low. But Wednesday after the close, we had IBM beat estimates, which made it great for a Thursday. And then Thursday after the close, we had Google blowout earnings. And so that really had us going into the weekend on a very high note. This week, not a lot of data. Compared to last week, we really don't have a lot of things going on here. So what does that mean? Earnings season is really in full gear this week. We have a lot of companies reporting this week. So I really think that earnings is once again going to be the king of the day. Just like this week to push the market up, I think the same thing is going to happen with next week. So again, tomorrow, on Monday, we don't have a lot of economic data coming out, but on earnings, we have ACI, coal sector, and Merck, drug sector before the market. And after the market, we have one of our former favorites in Steel Dynamics and Novelis from the semi sector. And then we still have our wonderful split play, CLF, that's been doing great. So let's start off and look at the sectors for the week. Okay, so let's go ahead and look at our sectors. First off, we have hotels, and you can see, although we've broken out again above the downtrend line, I'm still not ready to call this as a bullish sector. Basic materials, I am. Definitely a great uptrend here. We got a modified rising 3 pattern. Be careful about the triple top here with the wicks, but definitely materials are going in our bullish sector. Utilities, they did break the February high, so definitely utilities need to be considered a bullish sector. Builders, Casinos. The important thing about the casinos is they're diverging from the market. Everybody else is going up, casinos are going down. People, if in economic times, don't have money to go below at the casinos. So definitely want to put casinos in our bearish sector. Coal, look at it. It's back in the uptrend line, long-term uptrend line, rising 3 pattern, great volume. So coal is definitely in our bullish sector. Banks, biotech, the NASDAQ, we're going to talk about it here instead of with our flag list, just to make sure people see my commentary. And you can see that we went right up to the short-term uptrend line and fell back. Good volume. We have not cleared the February highs. We're right there. We also have some resistance right above it. So obviously bullish, but certainly we have just a little bit further to go to confirm the breakout. Definitely we can still draw a rectangle type pattern right in here. Okay, so still just a little bit more to go. Now the Dow is doing its own thing, and what's important is, look at this here. Remember, this is the downtrend line from October, broke out of that. Here's the short-term uptrend line, broke out of that. You know that we've been talking, hey, when the Dow finally breaks above our consolidation at 12,750, we got something. It did that. So the Dow is definitely bullish, but remember the Dow is only 30 stocks. So the Dow is definitely bullish. Drugs, internet stocks, very nice. It has cleared the February highs. Very nice uptrend line that we can draw now, broken out of this. So definitely like the internet stocks. Hopefully they'll continue to pull the NASDAQ higher. Gold, I love gold, but right now, Software, along with the internet stocks, still just a little bit to go to break the February highs, but it's right there. It's at resistance of that February high. Definitely like it. short-term uptrend there. Insurance, breaking out, but Oil services for our Kramer friends. Booyah! That's all I can say. Retail, I just want to point out that you can see we have a good strong resistance around 410. So it certainly looks like it could fall over from here. Stocks, breaking higher. And we have the Novelis earnings this week. So not going to be one that I love, but I thought it's important to say that they're still moving. Here's our S&P 500. Certainly look at this. Here's our downtrend line from October. We didn't break it. This is the 4.5-year uptrend line. Didn't break it. This is the short-term uptrend line for about a month. We didn't break it. So again, with the S&P, certainly we're happy. But remember, we're at resistance here at about 1400. We're at resistance here, the downtrend line. We're at resistance here, the uptrend line. So we needed to go just a little bit more to really confirm that the S&P 500, remember, we got 500 compared to the Dow 30. So this is really where the market is. It's bullish, don't get me wrong, but we haven't broken some key resistance area. Transports, very nice. Even with oil rising, transports are still moving, but we haven't broken February highs. Broker dealers, you guys know how much I love Goldman Sachs. But natural gas, very nice, making new highs. Look at the 5 moving average being support, rising 3 pattern, love it. And finally, oil, very nice. So on the bullish side, we have basic materials, coal, internet stocks, software, oil services, oil, transportation, natural gas, and stocks. And on the bearish side, we had casinos and hotels. Okay, now we're ready to begin our educational portion of our podcast. And you guys know that we've been talking about the psychology of trading through the book Mark Douglas. But I'm taking a one-day break here, and I'm talking about effective trade plans delivered daily. So I wanted to talk more about how you can begin creating your own trade plans, creating your own systems. And obviously, a trade plan defines where you are now, where you want to be, and how will you get there. And so here are some important questions that you can ask yourself to help you determine if you're ready to formulate your trade plan. So obviously we've got where are you now? Where are you financially? Where are you psychologically? Where are you in terms of background knowledge? What do you know about the market? What is your market? Are you going to focus on a particular sector? I'm going to focus on internet stocks, Apple and Google and Amazon, or are you going to focus on the Dow? Or are you going to focus on S&P 500 stocks like the financial sector and the brokers? What market are you going to focus on? What type of trades do you do? Are you trading spreads? Are you trading calls, puts with options? Are you just trading the stocks? So what type of trades do you do? What type of trades do you want to do? Do you want to learn something new like spreads? I remember when I first learned about spreads, and it took me a couple minutes because I had always thought about trading being about, I want my stock to go up. I want my option price to go up. But with spreads, you don't want it. You just want it to stay there. And it's all about that credit that you receive. So it took me a minute to figure that out until finally the person was teaching me. I had to say to him, here's how you should explain this, because all of us new people. Anyway, that's neither here nor there. So again, what type of trades do you want to do? What is your success failure rate? And these next 3 questions falling together. Do you look at that? Do you keep a journal, and how often do you look at that journal? All 3 of these things, you can't determine if your strategies are working for you if you don't do some type of analysis. I'm not saying daily. I'm not saying monthly. I'm just saying you need to routinely have a system in place to where you're going back and looking at the trades that you've entered and looking at the why. It's not just good to put down, I entered the stock on this day, we had to put in there why we got into that stock so that when we review it at a later date, we can see, well, the reason we've been using to get into stocks is working or it's not working. And finally, based upon what you know now about trading, what do you need to learn? Again, are there new strategies? Are there new indicators? Are there new systems? What do you need to learn to be successful at trading? I'm going to talk more about trade plans. You can see my blog down there. Go ahead and click there and read more about trade plans and how to formulate them. And we're going to obviously talk more about them in this system, in this podcast. So go ahead and give it a look. As usual, the podcast version is there. Thank you all who provide feedback. And as always, trade at your own risk. Thanks and good night.